Hi, everyone, and welcome to Stock Market Today. Ali Corman-Kinshrieve here with a breakdown of the action in today's session. And it was a very ugly day. We'll get into the technicals, Ken. You know, it's hard to trust the market these days. There's just been a lot of damage.
Well, with the stock market in a correction, we're at this point where you get early strength, and it tends to result into a wave of selling by the close. And we had the Nasdaq Composite up 1% very early today, but it ended with a sharp loss, and we just see this selling picking up the pace in afternoon trading. So strong opens. Weak closes are a hallmark of an unhealthy market. Healthy markets, we see weak opens followed up by a flurry of buying into the close. So market risk is clearly elevated now with the Nasdaq below its 200-day moving average. We'll see if and when buyers are going to start to come back in here.
Yeah, that's right. We'll have to see. But in the meantime, we're going to keep our watch lists fresh and a couple of stocks on the move today, an earnings mover and a couple of turnaround names that we want to be taking a look at.
Yes, indeed. Procter and Gamble had a great earnings report, getting good support at the 10-week moving average. We'll also take a look at Bristol-Myers Squibb, which gave a really good presentation early last week at the J.P. Morgan Healthcare Conference. And finally, FMC, one of many stocks in the chemical sector, looking pretty good.
All right, let's do that. But first, let's analyze the major indexes. So the Nasdaq Composite here closing down 1.2% for the day. The S&P and Dow down 1% apiece, and the Russell 2000 down about 1.4%. And Ken, as you mentioned, that 200-day line for the Nasdaq, we are now not only below it, and no more support there, at least for now, but pretty weak close as well, undercutting recent lows. So continuing to kind of break open here.
Yeah. So the next level we're going to watch is pretty much down around 14,000. I mean, if the Nasdaq does get down to 14,000, I mean, that's going to be a pullback of about 14%, 14.5% off its recent high. We're currently more than 10% off the high right now. So that's the support level to watch. The fact that we had such a weak close today, and a close near the Nasdaq's low, I think certainly brings a trip to 14,000 into play. It may or may not happen, but you really got to be careful in a market like this.
Yeah, that's right. And around the 180-ish level, that's an area where we had previously found some support, but that round number of 14,000 could be in play. You're absolutely right, Ken. And now let's take a look at the S&P 500, holding up much better, but still not looking great. Below 4,600 for a second session in a row, and getting further away from its 50-day line and headed towards its own 200-day.
Yeah, so the 200-day moving average for the S&P 500 is obviously a longer term support level to watch. The index is only about 5% off its high. I think if it comes down to its 200-day moving average, that's going to be a pullback of about 10%. So this is another index that looks quite vulnerable, and we just not a good close for the market today. So we'll see if that 200-day line eventually comes into play for the S&P 500.
Okay, and the Dow as well. We'll check in on that. Very close to its 200-day. Will that be a level of support? It was in the recent past, and small caps continuing to deteriorate. Here's a look at the IWM ETF tracking the Russell 2000. So continuing to see further weakness, now at its lowest levels since going all the way back to early 2021.
Yeah. So listen, all the major stock indexes are in a distribution phase right now, and the selling is eventually going to run its course. There's a lot of talk about the valuations in tech land, and still a lot of stocks out there that have pulled back 20, 30, 40% off their highs that are still selling at very high multiples. So in this higher inflation environment, these high multiple stocks can really get taken down hard, and that process is still going on right now. But we're in a market under distribution. We'll see new signs of accumulation at some point, but we still could be in the early stages here.
Yeah, we definitely don't want to jump the gun and think that buying stocks on sale right now is a good strategy. We don't know how much further we could go down before a new uptrend begins. So important to not jump the gun.
No, exactly right. And, we've been talking a lot about the chip equipment stocks being sort of a safe haven in the technology sector. But, there was a lot of selling in the chip equipment group yesterday and even more selling today. So we say it time and time again, a weak market eventually takes everything down with it, even stocks that are trying to make that last stand and showing showing strength in a down market. This market is eventually going to take everything down with it. So it's best just to step aside. We've been talking about raising cash for, several weeks really, and adopting a defensive posture. So hopefully, people aren't getting hurt here. We'll see signs of accumulation again, but certainly not seeing it yet.
Right. And it's important to focus on those pockets that are still showing strength just as a gauge of the overall conditions. And so let's take a look at PG Procter and Gamble, definitely standing out in this market, up about 3.4% today on its earnings report, just low double-digit growth on both the top and bottom lines, but better than its results in the last quarter. However, we don't want to be chasing something like this. The time to get into something like a P&G was, I would say, about a month or so ago. But Ken, what do you think?
Well, so they reported earnings, actually very good earnings. The earnings and sales were solid. They also narrowed their sales guidance. The market liked that. They also talked about the fact that they're going to be raising prices this year. Not a big surprise amid rampant inflation. But they're going to be able to pass these costs along to consumer. They said the price increases are going to help their profitability. So the market really liked that and sent shares nicely higher. So if you look at the weekly chart for P&G, this to me, looks like actually a pretty good test of the 10-week moving average for the first time. So you mentioned that breakout a while ago. It rallied nicely from the buy point, and now it's making a solid first test. So in a good, healthy market, the stock would be actionable, and it still
Right.
could be actionable now as it finds support at the 10-week moving average because money is rotating into these kind of safer, slower, steady Eddie names. Basically, stocks outside of the technology sector that tend to sell at reasonable valuations, and we'll get some earnings consistency this year from names like Procter and Gamble. So I think the stock looks good here.
It definitely looks good. And we've been talking about the importance of keeping track of the sector ETF. So here's a look at XLP, the consumer staples ETF. So you can just see a big move or rotation into this area in the last number of weeks here. Ken, I think potentially the apprehension for investors might be with all of these violent rotations that we've seen underneath the surface over the last year. I guess that's the thing you got to be careful with something like a P&G is could it now that it's made a move, could money be flowing elsewhere? Although, the interest rate environment that you've talked about definitely makes it seem like this is an area that is a safe haven for
Yeah,
investors.
it just seems to me like I don't know if this is going to be a short-term trade. If you think if money's all of a sudden going to flow out of the consumer staples names and go out of the defensive stocks and back into the higher beta growth names, it just doesn't seem like, at least right now, a likely scenario. Only because of the tremendous damage that's been done on a lot of these technology stocks. So that
Mhm.
some will go on and form new bases, but for now, defensive stocks like P&G, XLP, look like a pretty good place for your money right now.
Okay, and now let's take a look at BMY Bristol-Myers Squibb. This looks like a bit of a turnaround here to me, Ken, with a breakout of this cup with that handle forming below the 200-day. But could this be the time for this medical sector name to make a sustained move?
Yeah, I think so. It was early last week where they made I mentioned a positive presentation at the JP Morgan Healthcare Conference. That's when it gapped up over that handle buy point. And I just like how the stock has kind of moved sideways since then. You could even call it's just sitting actually just below the latest buy point here. So I just like the stock's resilience. A lot of good things going on at Bristol-Myers Squibb. They a while back, more than a year or two ago, they acquired Celgene. So they've got a big presence in the cancer market. They've got a strong pipeline. They recently announced a $15 billion share buyback. So the stock continues to trade well after a pretty positive presentation at JP Morgan last week.
Yeah, the recent move, no doubt, since late November, early December has been pretty compelling. But if you flip on over to the weekly chart or even the monthly, I guess we could take a look at. It's been quite a while since Bristol-Myers has had a sustained run where it's outperforming the S&P.
Well, that is definitely true. So on the monthly chart, you see a stock that really hasn't done much for a long time. But based on what the company said at the J.P. Morgan Healthcare Conference, the stock buyback, the pipeline, I'm thinking this one has a chance to work here. There's been a lot of carnage in the market recently. You're really not seeing it lately in Bristol-Myers chart. I think the positive response to last week's presentation is still there, and it's still holding above the 62.77 buy point. So it doesn't seem too late here.
Yeah, and a lot of blue volume there, which I know is something that you're extra focused on, Ken, that accumulation.
Absolutely. Yep. Nice signs of accumulation after the stock rallied off that 55 price level. So I think it looks interesting.
Okay, and now last but not least, let's check in on FMC. I feel like we've been talking more and more, as 2022 has kicked off about these chemicals names and FMC among them.
Well, the chemical sector has worked its way all the way up to a 15 ranking. We rank 33 sectors in our database, and the chemical sector is now 15th out of these sectors that we rank. And this is another stock. They reported earnings in early November. It fueled a big gap up for the stock, and then you had these three quick pullbacks down close to the 50-day moving average. And another stock that just looks good. It's handling itself very well after that earnings gap up, and has been trending above its 50-day moving average. And this is a company, they do insecticides and crop protection for farmers. And it's in a great sector. And I think the daily chart looks pretty good here, sitting just below a 112.41 handle buy point here.
Thoughts on waiting for it to pull back again and rebound off of the 50-day before buying, given that question that we've been facing of pullbacks versus breakouts?
Yeah, well, that's certainly, you can see the stock has handled the 50-day line pretty well in recent pullbacks. So that would be one way to go if you think that the market is going to extend losses here. FMC could get pulled down to the 50-day moving average. However, it may not, and if it keeps just kind of holding on to these gains and trading tightly on the daily chart, it may try to reclaim that the 112.41 buy point, in which case the stock would be actionable. But the reminder right now for people is, with the market in a correction, you really should not be doing much stock buying at all. I mean, I think most of us here are sitting in a pretty healthy cash position. You may want to nibble at a stock here and there with a small amount of money, small position, and that would be fine. But you have to have your stops in place in case this market takes a while to heal itself.
Yes, keep those positions small and your losses small. FMC here, about 3.3% above the 10-week line. So a reasonable area to manage that risk. All right, Ken, thank you so much for all your insights today, and to everyone for tuning in. As always, a quick announcement from me. And I was looking at a message there. Sorry. A quick announcement from you would be that I just launched a YouTube channel. So really excited to bring all of our IBD knowledge to a new and expanding audience. So really thrilled to be given the opportunity to expand IBD's audience. And so I hope you check it out. If you're following me on Twitter, I posted a link there. But if you're following IBD on YouTube. We'll have a link on that YouTube page if that's easier for everyone. But yeah, it's an exciting opportunity. And don't worry, I'll still be, Ken, in these SMT videos with you.
Oh, goody.
Wouldn't give that up.
Yay.
All right, good stuff. All right, thanks so much, everyone, for tuning in. We'll see you right back here tomorrow.